Hello, this is Mark from tradingforum.com and welcome to this video on how to start creating a PSAR trading strategy. You may have seen my previous video on how to calculate the PSAR indicator using Excel. This video is a follow-up to that one, looking at how the PSAR indicator can be integrated into a trading strategy. There's a lot of information on the internet and in books about the PSAR, about how it can be used in different ways, but I haven't been able to find on the internet any back-tested, verifiable results showing whether or not this indicator that was created 35 years ago is still relevant to today's financial markets. So what I've done is I've created three basic trading strategies, all using the PSAR indicator in slightly different ways, and I'm going to backtest these trading strategies using historical data on the Euro-US dollar Forex pair, which is my favourite trading instrument, and I'm going to use the daily time frame and historical data of about 15 years worth. Okay, so the first strategy that I've created, strategy number one, is the most simple of all. I'm using a long-term exponential moving average as our open. So we're going to enter long when the EMA closes above the EMA and the previous close was below. I'm going to enter short when the close is below this EMA and the previous close was above. We're only going to have one trade at a time, and we're going to use the PSAR to close. So when the PSAR flips, if we're in a long trade and the PSAR flips from below to above, we're going to close the trade, and we'll close a short trade in the opposite situation. So going into my results here for strategy number one, this is actually the spreadsheet that I'm doing the back testing in. This part of it here was the part that I showed in my previous video on how to calculate the PSAR, and the actual back testing is being done by the spreadsheet that I created as part of my ebook course, how to backtest a trading strategy using Excel. There is a link on the screen if you would like more information about this ebook course. Okay, so looking at the results here, you can see this here is strategy one. We're using standard settings for the EMA, for the PSAR rather, and we're using a 200 period EMA entry. And we can see, despite the fact that this is a very simple strategy, it's not really been that good over this period of time. We've had a relatively small number of trades, and we could manage to, from 100,000 starting capital, we've managed to eke out a very small net profit. Our win percentage is fairly decent for a trend following type strategy, just under 45%, and our maximum drawdown of 16% is also fairly reasonable. But our equity curve is not going very far, and this is a relatively unsuccessful way. The idea behind strategy number one is to try and use the PSAR, the value of the PSAR, which accelerates in the favour of the trend. So if we've opened a position, a trend forms in that direction, the PSAR will be able to grab as much of that profit, of that profitable move as possible. However, this was not very effective in this case in practice. Okay, so strategy two, I'm going to use the only slightly more complicated. We're going to use the PSAR to open and close the trades in this case. The difference is we're going to use two different EMA filters in strategy two. We're going to use a long and a short EMA, and we're only going to enter long trades when we're above both, and only enter short trades when we are below both. So very simply, once we've passed our EMA filter, we're looking for the PSAR to flip, and we will then enter in the direction of the trend. When it flips in the opposite direction, we will close the trade. Again, as in strategy 1, we'll only have one trade at a time. Okay, so these are the results from strategy 2. You can see here that it looks a lot better than strategy 1. We've got more trades for a start, so we do have the opportunity to generate some fairly decent profits. In this case we're using a 100 period EMA filter. I didn't want to refine these too much, but I found that the 100 period seemed to give us pretty good results. I've not been looking at different variables, but as a starting position this gave us pretty good results. Okay, so our net profit here, we've gone from 100,000 to just over 200,000, doubled our capital over the time period. We're showing still a fairly decent win percentage, just under 42% of trades were winning trades, and a maximum drawdown of 25%. The good thing I can see looking at the equity curve is that this seems to work well in almost all of the markets. Over the last 15 years there's been quite a few ups and downs, but this strategy has held up pretty well, and right up till the present day seems to be continuing to generate decent returns. Okay, the final strategy I wanted to look at using the PSAR to open our trades, but then using the shorter of the two EMAs as the closing mechanism. So again, the same as strategy 2, we're going to want to be above both exponential moving averages before we enter long, and below both of them before we enter short. And the shorter of the two EMAs is also going to be our closing mechanism. And if I scroll down now to strategy number 3, we can see that the results on this are pretty decent as well. It seems to work similarly to strategy number 2. We've got exactly the same criteria here. We've got a very similar level of net profit, marginally higher profit factor, which is the absolute value of winning trades divided by losing trades, and we've got a win percentage which is slightly lower, 35%, but we've got a maximum drawdown that is also slightly lower at just 16%, which over that time period is pretty respectable. The reason we've got a lower win percentage is that our closing mechanism is slower and won't be able to close the trades in time, some of the losing trades in time, as the PSAR closing system would do. But the advantage of using an EMA close is that it allows the trends to go on for longer if they are able to. Again, looking at our equity curve here, this looks pretty good to me. We're showing a consistent upward movement right up to, again, up until the present day, and it looks like we can never extrapolate too much from these, but the indications are that this strategy will continue to be profitable into the future. Okay, so they're the 3 strategies. As I said at the start of the video, I didn't want to over refine these. I've not used, for any of them, I've not used a stop loss or a profit target. It would appear from the results that I've got that strategy 2 and strategy 3 are a good starting place. It shows that the PSAR indicator, all that it being 35 years old, is still effective in today's financial markets, or can still be effective in today's financial markets. The results of strategy 2 and strategy 3 suggest to me that the PSAR indicator has to be used in these case with other indicators, in these case with exponential moving averages. There are no doubt other trading indicators such as the MACD, such as possibly also momentum indicators like RSI or stochastics, that will equally return good results when combined with the PSAR. Personally, if I'm looking to develop a PSAR strategy, I'll be looking to improve upon strategy 3, looking at filtering my entries in particular, trying to root out the ones that are less likely to be successful. Possibly also using some form of envelope to look at the strongest entries rather than just a simple exponential moving average. Okay, so I hope you found this video useful. Please leave some comments if you've got any feedback or any other ideas about how we can develop these strategies or other ideas for videos relating to this. If you'd like more information about trading and backtesting using Excel and about the financial markets in general, please go to www.tradeinformed.com.